Hey guys, how you doing? So I'm Dan from Trading with Dan, and this is our candles and candles patterns section of the mentoring program. So candles and candle patterns, candles basically are they're like the rawest form of visualized price action that we will use on a chart. So there's a lot you can get from a candle. Obviously you can see like the direction the market's going, whether we get rejected from a level or not, and just generally you get a good picture of what the actual underlying price is doing, all summed up in just one little visual aspect. So they are a really good way to observe price data, and I think they pretty much are the most popular way, to be honest. I mean, there are other types of candles, but I guess they're still candles, and then you could have line or bars. But yeah, candles are pretty much the most popular, I think, because they do have there's a lot of information encapsulated in just one basically candle. So here we go. So this is what the candle shows us. This is the information that we get. When I say a lot, basically 4 pieces, but this is just from one candle. Obviously when you see the candles next to each other interacting, then obviously you can get even more information from that. But from any individual candle. Obviously when a candle is red, that means it closes lower than it opens. So the open is here on a red candle higher up, and then the close would be at the bottom. And then the high that the price trades during the duration of this candle. So let's say this is a 15-minute candle. So during that 15 minutes, this is where the candle opened. This is the highest price that the price traded during that 15 minutes. This is the lowest price it traded, and then this is where the candle closed. So I mean, it gives you a lot of information, but you don't necessarily know exactly what happened during the course of that 15 minutes, because we could have opened here, we could have then come all the way down to the low, then all the way up to the high, and then all the way back down to close here. So that would have been a pretty wild price action for 15 minutes, and that wouldn't really be represented in this candle, and that wouldn't often be what happens. What normally would happen was you'd kind of probably open here, you'd maybe trade around this area a bit, move up a bit, start to move down a bit more, move down, then move back up, and then close around there. That's typically what would happen in a candle like this, but obviously we can't show too much information, otherwise it just would be too cluttered. So here is an example of a similar candle, but a green one. So we opened here, we then traded down to here, not necessarily straight away. Like I said, we could have traded up first and then down and then back up, but what is most likely, we opened here, we maybe came down a little bit, then started to move up again, moved up to the high, and then by the time we closed the candle, the end of the 15-minute period, we were up here, and then that was where our close was, and then we have a nice green candle. Right, so how you can interpret supply and demand from candlesticks. So this is very basic. If there is more demand for an asset, the higher the candle will close relative to the previous candle. So as you can see in this part here, you can see Bitcoin is pumping. It's a bit blurry here, but it's a $100 move. You should be able to see this on your mentoring document. But yes, you can see we're getting a lot of green candles that are pretty much opening at the high, opening basically, and then closing at the high, opening and closing at the high, opening and closing at the high. And that is a sign of a lot of demand for the asset. That's obviously why the price is going up. And that shows that that's a bullish interpretation of supply and demand from what we can see in the candlestick. So now if we have a look at what happens after this. So this is the move that we just looked at there, all those green candles. So it topped out there, but what it did show that there was a strong demand, and after a bit of consolidation at that high level, we then burst up even more. And as you can see, so that was a good indication that there was a lot of buying pressure. Even whilst we were consolidating, we didn't really break lower than these candles. So the bears weren't able really to get in control. So obviously ultimately the bulls won and pushed us up even more. So wicks are very important on the candles. So these are what wicks are. I mean, you can sort of call them wicks or tails. Obviously they're called wicks because like you get a candlestick, literally candlestick, and then the wick is the little bit that sticks out the top. So you often call them tails when they're at the bottom, because I mean a candlestick doesn't have a wick at the bottom, so you kind of call it a tail, because like, I don't know, I guess a mouse has a tail, an animal has a tail at the bottom. But yeah, that is why they're called that. But yes, we've got the wicks. I mean, you can call them wicks to the low at the bottom. I just call them wicks. I don't call them tails. Even when they're down, I call them these are wick. But yeah, so what Wicks can be a sign of either a bullish or a bearish candle. So say we've got a move up and then we get a long wick, that's showing us that price was rejected at that higher level and then came back down. So we traded up there, but before a candle could close, so quite a short period of time, we got slammed back down basically. And that just shows that there's basically a lot of bearish price pressure up here that didn't allow the candle to stay up. So we see it again here. Again, we move up and then we get a slam down in that candle period. So we have a long wick where we did trade up but move back down. We see it again here. You can see it to the downside a bit here too. Look, the downside wicks that sort of showed price was getting rejected below there. So then we moved up a little bit there too and a little bit here. And yeah, so ultimately we can see what happens. We do get rejected on these highs, and then price then just goes down because we can't go up, so then we have to go down. So how to trade tails or wicks. So the longer the wick is, the further away it is from the candle body, the more significant the potential reversal in trend will be. So if you do get a big long wick, that shows that we've probably flushed out all of the longs. And we can then re-add new longs. So we squeeze them all out, cause them to sell, push the price down. The bears have pushed the price down, and then that's it. So now we can have fresh bulls come to the market and then start to buy us back up again. So obviously, the stronger the rejection from these lower levels, the quicker we then move back up, the more bullish buying pressure that there is, and that can obviously show a more significant reversal in the overall trend. I mean, if it's only a tiny wick, it doesn't necessarily mean we're going to go back up again. So here we've got a nice little wick to the top side where you can see we tried to move up but got slammed back down. So that was a sign of weakness, and again you see we've got a slam down. So then here finally we've got a wick to the downside. It got bought back pretty quickly, and then you can see then the trend started to move back up. So that was an example. So in this example we can see that the price is pushing up. We're getting these wicks to form to the upside, so this is indicating that there's more supply up here than there is demand, because when the price goes up there's a lot more selling, and then it pushes the price back down. So how does that work out for us? So here's a continuation of that previous example, and then look, you can see that pretty much signaled the top of the trend. We had a few more wicks up and then we ended up coming down. So these candles are actually known as a shooting star candle, but we'll go into these a bit more, into the actual what the names of the candles and what they signify later on. But yeah, shooting star candle, we shot up, we basically got rejected and came back down, and then price obviously then weakened. So yeah, that brings us to the end of this little section of the candles. In the next one we're actually going to go over some of the individual types of candlesticks and patterns when they're together. So I look forward to speaking to you guys on that one.